So what markets are the most popular to trade? I managed to grab this from IG Index, the broker here in London, that says about the most traded markets for their clients for last month being April 2024. And you can see here that the most traded market on the right hand side is the Nasdaq, and the second most traded is the Dow Jones, and then the S&P 500, and then you got the German DAX here in Europe, and then of course the commodity gold runs in fifth place. So the Nasdaq is the most popular markets. We see that virtually every month from IG. Their clients trade the Nasdaq. But why do they trade the Nasdaq? Why is it such a good market to trade? Well, let's go into the chart now and discuss some of the reasons why it could be such a good market to trade. Now, I've got the daily time frame up here of the Nasdaq. Now, you'll see the name of it's called the Tech, US Tech. So I have to rename it because there's all sorts of licensing problems with having to call it the Nasdaq 100, so they have to call it something else, and of course Tech is the perfect name. So on the chart here down below, I've got an indicator that you can get in any chart package, and what it does, it measures the average true range over a period of time, and the default setting is 14. So it's measuring how many points it moves, the range of the day over the last 14 days, the average range of the day. And if you look on the right hand side, there's a little highlighted, well, nearly highlighted there, it's 293 points per day. So this reading right here today is 293 points. It moves on average a day, so up and down during the day with a look back period of 14 days average. Okay, so as the market, and you'll see here, if I show you what April, so the reading came from April from IG. If you look at April's trading, we go from the 1st there all the way to the end of April, which is around here. Okay, right there, let's say that. So that's April's trading. That's what all IG clients have traded within that chart packet, that chart area there for April. Now, if you can see down below here, the average true range starts to go up. So it started the month pretty much at what, 200 points per day, but then it started to increase more points per day. Now, there's a rule of thumb here, guys. When the markets and the indices in particular drop, the range goes up. So there's more opportunity to make some very nice profits as well, because from 200, now it's trading at 293 points on average per day. The market pushes down, and the market's going down increases volatility. As the stock markets go up, volatility pretty much stays the same and slightly goes up and then down, pretty much steady eddy. Okay, but as stock markets decline, and decline quite heavily because everyone's been long this stock market, and then we were always looking for this massive four-wave divergence, and we finally got the move down here. And as it dropped down on the Nasdaq, the volatility increased. More traders were trading it, more volume was going through, and fear is a bigger emotion, bigger driver than greed. So as the stock markets drop, then people are liquidating, traders are liquidating their long positions. And there's also another side of it. People are short in the markets. And our indicator here, the storyteller indicator, is flatlining. So when it goes flatline like this, we're getting ready for a big move. It's not the end of any move. We want to be getting ready for a volatility move. Now, an increase in volatility with the average true range and a drop in the stock markets is a fantastic opportunity for any trader to trade the markets. Any trader can look for a signal to short the markets. And I think in 2024, you have to be flexible here. So not just be long the stock market, you have to be knowing how to short the stock market as well. Because if you can short the stock market, you've got that flexibility, because when the market's pushed down, then you can take part in that move lower. Let's have a little look at the S&P, and the same thing. As it started to drop here, the volatility increased, and the average point movement per day increased as well. Okay, so when it starts to drop lower, we're likely to get maybe what? A move up. So we might start to see a green pro trend system. Until we get that green pro trend system, then we won't be getting long, because we're using our timing and our market analysis and our experience to here to know when to get long or short. So as this starts to drop, we might start to see a move. Now, if we don't see a drop, a move higher, then we see another red and a drop down like this. Watch this volatility really increase higher, guys, okay? So it's a great time to be trading. You want to embrace the moves down. Here's the German DAX. Same thing again. Stock markets rallied higher. Average true range of the days literally dropped. Now, as a day trader as well, I want the most volatile markets, but not the most extreme like the Mexican peso, 1,000 points a day. I want sensible markets that can give me enough points per day, because let's say I get stopped out of one trade. I don't want to be in the slowest market, because I won't get another opportunity to make that money back in the morning session when I'm trading. So I want a market that's sensible, that can give me, like the German DAX, 200 points per day. How many opportunities throughout that day trading session yesterday did I have to be able to make a decent living and a decent amount of points? I had lots of opportunities, but if I had a market that was only giving me, and some of them have done recently, guys, especially in the FX market, like 20 points per day, and I'm trying to make 20 points per day, well, I've got to get the top and the bottom absolutely spot on and in and out trades. So you want markets, you want to trade a market as a day trader that's got enough volatility for you to make a nice income. And the DAX has. The DAX is nice, and it's extreme volatility here at 200. And then what was the other? We had the Dow Jones Industrial Average. That's another market that's pushed higher here, so we might get some green PTS and the move back up here. So you'll start to see the volatility decreasing as the price starts to push up here. If it starts to roll over at some point, if we see a green, then a brand new red, because we've got to make a new high. For us to really be in a healthy market, we've got to break out and make new highs here. But as we start to push green, we'll stay long until it turns red. That's what we do here at Trading College. And then you got the gold market, which has been a lovely move. And you can see as gold, look at this, guys. We were buying gold on this breakout of this symmetrical triangle. Look at the volatility indicator, which is our storyteller. It flatlined. So we had the combination of a pro trend system, we had a flat storyteller, it broke the symmetrical triangle, and it pushed up. What a lovely volatile move. No, it wasn't a volatile move. It was a steady, clean, beautiful move. Look how it just gradually grinded higher here. It was absolutely beautiful. Okay, and then we reached some extremes. You can see gold here started to push down, and the volatility here has actually decreased slightly, which is really interesting. So this is telling us now that they're getting ready for another buy signal, okay? Because it's actually coming down. People are taking part in this market in gold as it's climbing higher. That's really healthy. We want that. We want buyers stepping in and more traders buying it as it's pushing higher. And as it's dropping, we want it to slow down. We don't want it to be like the stock markets. We don't want it, as it drops, the volatility increases in stock indexes because everyone's long. Most people buy stocks. They don't short. Most people are going long the markets. They don't short. Well, with gold here, we want to see that lovely pullback, low volatility, and then this will then start to increase again as the markets go up. A complete opposite to what the stock markets do. And that's why people love trading gold. Okay, guys, I hope it helps. Have a little think about that, because I think as a day trader, are you trading a market that's giving you enough opportunity to make your day's money? And if not, then maybe you need to look for a market that does give you enough opportunities as a day trader. And as a swing trader, enjoy those moves, guys, because I think we're going to come into some very hot markets very soon once we get this long 3-day weekend out the way. Have a great bank holiday weekend, and I'll speak to you soon.